Good afternoon. Welcome to today's program on greenhouse gas management in complex times. I'm Ben Hill. I'm with Georgia Tech's EDC, Technology Incubator, and I would like to welcome you to this ongoing, and be sure to mark your calendars for Wednesday, January the 26th. Also bear in mind that we will not have a program in December, but we'll reconvene in January. A number of organizations make this series possible, and I would especially like to thank them and recognize them for their ongoing support. The law firm Sutherland, Asbill and Brennan, McKinsey and Company, South Face Institute, Georgia Tech, the Enterprise Innovation Institute, and the ATDC, the Georgia Tech Buyers Institute for Sustainable Systems, Georgia Tech Strategic Energy Institute, and the Georgia Tech Office of Sustainability. For today's presentation and previous presentations, they can be found on the website, and also archived webcasts can be found on the program website, which you'll see the URL on the slide, secleanenergy.org. secleanenergy.org, and within about 24 hours after today's presentation, we'll have the archive version of this webcast up for you. For those of you participating by webcast and who might have questions, you can email those questions to me, and I will pass them along to today's speakers. My email address is ben.hill, ben.hill, at georgiatech.edu, and I will look forward to getting your emails for those of you who are participating over the web. Marsha Ward with Sutherland will introduce our speakers, and at this point let me just say thank you again for being here and look forward to your participation in the January 26th program. Thanks.
Thank you, Ben. Sutherland is proud to sponsor the Clean Energy. A great program lined up for you today. Our first speaker is Ostrowski. He is the director of the company and one of another supporting sponsor of this program. Ken is a director in McKinsey's Atlanta office, and he leads McKinsey's North America's electric power and natural gas practice. Ken is a thought leader in greenhouse gas emissions, as evidenced as his co-authorship of the report Reducing U.S. Greenhouse Gas Emissions, How Much and at What Cost, and his recently released Unlocking Energy Efficiency in the U.S. Economy. Ken and McKinsey advise their clients on strategies to employ to align their best practices for greenhouse gas emissions for their clients in a very shifting and changing regulatory climate. So we look forward to hearing that presentation today. Sunny Nastase is Senior Director of Sustainability Solutions for UPS. She will be our second speaker. In her career at UPS, she's been involved in numerous facets of supply chain management and streamlining, but her current duties and responsibilities is that she oversees a number of UPS programs that include carbon emissions reporting, carbon neutral shipping, eco-responsible packaging program, and green consulting. And she's done a pretty good job of it, as UPS has been on the Dow Jones Sustainability Index for 8 years running. And UPS is known as a top 20 corporation in the industrial goods and services sector in North America based on UPS's economic, environmental, and social practices. So we look forward to hearing more about that. First up, we'll have Ken as our first presenter.
Make sure I get this on. Great. Okay, well, thank you, Marcia, and thank you, Ben. It's always a privilege to both attend and to have a chance occasionally to present at these sessions. So I'm delighted to be here. And as Marcia mentioned, interesting reports: the U.S. greenhouse gas report, the energy efficiency carry around. If I carried what we published, I'd barely be able to move. But we've been looking at abilities. I'm going to frame the conversation both the current environment that we're in. And what I wanted to share with you is just 3 overall points. I'm going to try to paint a fairly high-level picture of it. Just a great case example of one. What we see happening is recent shifts in natural gas prices and the political outlook for GHG really alters what the near-term is for CO2 management. And I'm sure those of you much more so, but as we look at the ebbs and flow, thinking about greenhouse gas management, there's a lot of factors that over one period of time will rapidly accelerate the movement, and then you get another set that might slow the momentum a bit. We have no question about volatility as we make those advances. Term, the second point that I'll speak to, continue to face broad challenges resource productivity across multiple constraints. So clearly carbon, but also water, waste, land use, and so on. How we see those factors So for the first point, many of you followed this is both at the global level and then of course what's happening closer to home here in the US. But for example, in Copenhagen, you got the polar bear here wanting to kind of return the that was made, but real legal or political agreements that were achieved, no global targets, no binding emission reduction targets. Set of conversation and regulate greenhouse gases. But that it we work with utilities with natural gas, and I think many of you are grown rapidly. The and then been fully publicized, and the result of this. And you can just see the bar chart showing the amount of new resources that are being added, and this was back in 2008. It continues to grow. This is a little bit of a complex curve, and I'm not going to try to go through the whole thing, but the result of it has been the flattening of natural gas prices. So if you follow that red line, back in the early 2000s, prices more between residual fuel And then if you look at sort of the 2010 line going forward, it's hovering just above coal. In fact, we use the term a coal floor. You know, if gas would go over, then you would just start power or gas burning, at which, you know, with shale gas and people look at gas versus other. Gas also competes with low price of gas change some of the fundamental economics. And if you look at this is just from a resource planning decision as utilities look at it. The bar charts just show you, if you just kind of look at the height of the bars, these are, you know, give or take what a resource planner would look at when they're trying to decide, should I build, you know, for my next incremental source of generation, should I look at wind, should I look at solar PV, should I look at nuke, supercritical coal, CCGTs, integrated gasification. And what you could see, and this has a whole set of assumptions, and every one of these charts, you know, the real critical thing is to look at the detail. But in this case, we had built in a carbon price anywhere between $25 to $75 a ton, and we have assumptions for capital cost and fuel cost. And if you look at the height of the bars, you kind of see in the traditional fuels, it was, you know, pretty close, give or take. You know, you might have a higher number for nuclear if you just believe the overnight capital cost will be $5,000 to $6,000 versus $4,000. But roughly, you know, you were starting to see some convergence. Photovoltaics still higher, you know, hence why we need a lot of credits and continuing evolution to get those costs to be fully competitive. But now look at that blue bar that we sort of added across the page, and that's what the price of a combined cycle gas turbine with natural gas in the $4 to $5 range, with no CO2 price, and we assumed a higher capacity factor as a result, since with the cheap gas you'd actually be running these at a much higher level. So you see it starts to change the game, and if you're a utility resource planner, now you're kind of scratching your head saying, you know, do I really want to be building nuclear with these types of economics? You know, what do I think about wind? And you know, and you start reading the industry rags, and Excel starting to raise questions about whether they should be adding more wind because it's starting to show up in the relative rates. People are really questioning what the future holds here. So it's changing the game, and it's making people really rethink. This is another way of portraying it. We just took two dimensions: price of CO2 on the vertical axis, price of gas on the horizontal axis. And you know, this is a rough approximation. Again, it all comes back to what you believe about the relative assumptions. But just to give you a sense, with gas at $4 to $5, you can see it almost doesn't matter the price of CO2. That, you know, if you believe that gas is going to be sustained at $4 to $5 for the next 20, 30 years, you know, the economics almost take you to, you know, independent of what you believe CO2 is going to do, you'd probably favor the development of gas. Now, this is just comparing gas, coal, and nuclear in this particular picture. So to start getting up into nuclear, you know, you have to be thinking about gas at 6, 7, 8, maybe even more, coupled with some type of future CO2 price. Of course, now if you're a nuclear developer, you know, this thing isn't going to come online for 10 more years, and it could have a life of 60 years. So, you know, anybody want to venture to guess what the price of gas will be in 2050 and the price of CO2? So this is the challenge that the resource planners have when they're trying to balance off these decisions. But it gives you a feel for what people are facing right now today when they're looking at what the incremental best choice is. There's sort of this dash to gas being talked about because of these fundamental economics. Good news is energy efficiency still fairly robust. So this was the energy efficiency curve. I'm just showing the gas bars that we use. We had integrated with gas, oil, electric, but just to make the comparison a little bit cleaner, you can see again, if we insert that blue line, let's say gas is at $5, and it would vary depending on whether you're talking about a residential or an industrial price, but you can still see, a good 2/3 of the curve is still economic relative to a $5 gas price. But some would argue it's not as economic as it was a couple years ago when gas prices were higher, and then even before that when gas prices were even higher. So a lot of these questions about the economics start to move when you introduce $4 to $5 gas, which is raising questions as to how aggressively do we go at some of these opportunities. And then I just want to leave this section by saying, but who knows what really is going to be the future. You see here just the forward curves at each point in time when the red line starts, we plot it. So we got oil and then we show gas, and you can see that the future markets are never a very good predictor of what the actual price will be. The blue line is what the actual price was. So today, right now, I think everyone is pretty convinced that natural gas is going to be sustained and stable at $4 to $5, just like every one of these forward curves had a pretty clear view that whatever the price was at that point in time, it was going to be fairly sustained and stable. So, there's a lot of factors out there. People are looking at the environmental implications of the process for extracting the shale gas. There's questions about if there's a mad switch to gas, will the supply response keep up with the demand? We think it could, but it might not. What are the economics of the gas producers going to look like? So, it's who knows. But right now, it's $4 to $5, and it's looking like there's a robust supply that's going to be there for a while. So in the near term, it's complex. What do we do? What do we make of the choices and the economics? Longer term, we think the trend lines are pretty clear. And in our view, there's going to be continued pressure to mitigate carbon, as well as look at a whole set of resources that are increasingly constrained and going to need to be addressed in anybody's planning going forward. So we've actually established a practice. We used to call it climate change special initiative. We now call it the sustainability and resource productivity practice, because we think it more aptly reflects the fundamental challenges that are facing companies across the world. Sustainability, by that we mean the sustainable development that meets the needs of the present without compromising the ability of future generations to meet their own needs. So how do we keep ourselves in balance without just continually borrowing from the future, not just in a financial sense, but in an environmental resource sense? And resource productivity being the amount of GDP that can be generated from one unit of resource, whether that's carbon or water or land, starting to think about how we innovate and become more effective at getting the productivity out of the resources that we're using. And the reason for that is there's limited availability, and the cost of natural resources are challenging unlimited growth. But the questions that it poses is, what are the resource investments that are economic today? What will they be going forward? And what policies are needed to improve that? So I'll just share a little bit of perspectives on some of these dimensions. If you look at the global population, the three bars on the left side of the page here, you can see that projections say between now and 2030, we're going to be growing at a rate of about 22% would be the increase. If you look at the global primary energy demand, it's double that. It's 44%. And of course, the reason is as not only we add more people, but the standard of living is going up across the globe, and that's demanding more resources as they, in other parts of the world expect that they ought to be living the same quality of life that we enjoy in the U.S., and that's just pushing up the amount of consumption per person. So this is just one indication of that. If you look at carbon, and this is a global look at carbon, the top line shows the reference pathway. That's the trend line that we're on, growing at a CAGR of about 1.5%. The lower blue line shows what the pathway would need to be if we were targeting 450 parts per million of carbon. Now, of course, you recall a while ago there was a big movement to say we should get to 350 parts per million. And a lot of people are just coming to a point of view that that's probably not achievable. But maybe we shoot for 450, and it says with overshoot, meaning we're going to exceed that level, but then get back to a stable rate where we'll be operating at that level. And you can kind of get a sense for the, the change relative to 1990 and the level of reduction. But just focus for a minute on that 2020 number. We'd have to reduce by roughly 14 gigatons of CO2 between now and 2020. Now, just to put that in perspective, 14 gigatons would be the equivalent of all of the US emissions, plus all of China's emissions, plus all of India's emissions. That's the magnitude of reduction that's calling. I'm not saying, get us down to this. I'm just saying if we went to zero, if China went to zero, if India went to zero, that's what 14 gigatons is. It's an astonishingly large number.
Is that per year for 10 years?
Well, that's the rate of that's what your output would be in the year 2020. You would get down to 44 gigatons on a global basis. So in order to do that versus the reference case, you have to get that much more productive to remove that out on an annual basis. So it's an annual number at that point in time. So it's staggering. We developed the curve on it. It doesn't show up too well. This is the global curve. Many of you have probably seen the US curve. Similar in that there's this symmetry around the zero cost axis. Stuff to the left is below the axis, meaning it actually is economic. It provides a return on the investment to pursue. The bars on the right side are more costly than the business as usual. When you see the US curve, it's almost equally balanced because we're such energy hogs. We have a lot of energy efficiency opportunity on the left side of the curve. But these are all the types of things that we've identified to date. As we were talking earlier, it doesn't include all the innovation that's yet to be unlocked, and hopefully there's a lot of it. But when we measure it up to 2020, trying to calculate everything we can up to, in this case, it's 60 euros per ton, we get to 18.5 gigatons. So you start. So that's like that's the full supply that we can identify of carbon abatement available today using all the techniques that are known. Now, hopefully we'll get others that develop over time here, but you'd have to get the vast majority of that to be on track with that 14 gigatons I mentioned earlier. So some real challenges on this particular dimension. But then just to give you a sense, this is just showing what that implies in terms of resource productivity. So carbon's down on the bottom. So our productivity growth rate over the period 1990 to 2008, the left side of the bars, so if you look at carbon, we were getting more productive every year. We were finding ways to sustain GDP with less carbon consumption at about a rate of 1% CAGR over that 18-year period. To get on track with what we're saying needs to happen, if we believe we need to get to that pathway, we have to basically increase that rate 5 times. And that's over a shorter period of time. That's over the next 12 years. We have to be improving at a CAGR of about 5.6%. But it's true of all our other resources too. Oil, water. Water's the next largest, where we haven't made much productivity improvement in water, but increasingly that's going to be a very scarce resource and a critical constraint. Many people say water is going to be the petroleum of the next generation. And I guess that's going to be I'm giving some plugs here for the upcoming events. So just to kind of give you a sense. And the point on the right-hand side, the resources in competition with, it's that these are not all done in isolation. So you could either view this as an opportunity for a virtuous cycle or a risk of a vicious cycle, where if we start getting constrained on oil and we start finding new ways to develop and extract oil, we'll be competing in terms of producing carbon or consuming water or consuming land for biofuels. Likewise, power, it could have implications for carbon, for the consumption of water, for different uses of land to produce the biomass. So we can't look at these critical resources in isolation. They all link together with each other. And just to give you one illustration of that, This is, for example, just showing the relationship between energy and water. And new energy consumes more water. If we're trying to develop new water, it's very energy intensive. So we have these interlinkages where if we can figure out how to become vastly more productive in our use of energy, that will have a benefit in terms of our water consumption. If we can figure out how to become vastly more productive in our consumption of water, that ultimately helps benefit us on energy. Unfortunately, the trend lines are probably taking us the opposite direction today. But we've gone through and just tried to identify the water intensity and the power intensity of the different options. And there's a whole, if people are interested in this, there's a whole set of research that we've been doing on water on a global basis. So, and any of the things that I reference, you can go to McKinsey.com, and there's a great website that has more reports than you can read in a lifetime. But if you know what you're looking for, you can get there. The other point I wanted to make is that we're seeing a shift in the mindset. We were at a point in our stage where it was just development, the top circle. But I think we are increasingly coming to a point that business as usual, of having just unconstrained development, high carbon growth is no longer an option. And it's, and it's probably more prevalent outside the U.S. I mean, if you go to Europe, people point to China, but if you look at what China's doing, they're making some pretty aggressive commitments to how they're going to rein in carbon. They're also looking at how they're going to dominate the solar industry and how they're going to dominate the water industry. So I don't know it's all altruistic. They're seeing the job growth and the economic development side of it. But I think more and more we're seeing business as usual, unconstrained growth is not an option. Mitigation, which is let's find all the ways to reduce the carbon intensity of what we do to try to get us to that pathway curve, the 14 gigatons of reduction. These are all the different levers we can pull, and it's starting to align with the broader development as people accept that high carbon growth is not sustainable. So we got to, if we want to keep growing, we figure out ways to do it in a less carbon intensive way. But there's a third circle that's coming into the dialogue now, which is adaptation, which is a recognition or a resignation to the fact that we are not going to completely get ahead of this. And and depending now, this gets into the more speculative side of what you believe the relationship between carbon and climate and all that will be. But we just did a fairly extensive report. It came out under, it was working with Entergy. They were the prime sponsor, but we did a Gulf Coast study and actually modeled what's happening with storm intensity, not only the frequency and magnitude of the storms, but you get sea levels and other effects in there. What's it doing to the cost of the coastline in terms of the impact on the economy? And then what are all the things that you can do to adapt? How do you protect against the fact that we're probably going to see an increase in the intensity of storms? So now what do you do about that? Strengthen your dikes, strengthen your electric distribution system, put in new codes for your drilling systems out there. So adaptation is increasingly a mindset that's being developed, and an opportunity. It's a business opportunity for people to think about how, I can think about how I play in the mitigation space. I can also think about how I play in the adaptation space. And then let me just shift gears and say a few comments on how companies are addressing these dynamics. And I mentioned offense and defense moves. So this is a way to think about it. The two items on the top, growth and return on capital, are what we refer to as an offensive approach. And then at the defensive, risk management, and we talk about management quality in terms of adaptability, flexibility, how people view the world and recognize both the changes and the risks. But on growth, there's lots of opportunities that relates to new markets, new products, new customers, gaining market share, bringing innovation to the forefront, reputation, differentiation, and a couple classic examples would be Siemens and GE with their eco-imagination, and you just get a sense of the dollar value of their portfolios in these environmentally related spaces. There's another side to the offensive, though, which we call return on capital. And this is people just recognizing that there's a lot we can do within our business that not only is carbon friendly, but is actually economic friendly. It's bottom line friendly. And a great example of this is Dow. You know, Dow looked at their portfolio of businesses, and and within that portfolio of business, they had lots of little opportunities to address energy efficiency that, quite honestly, just were not getting done because each individual opportunity didn't have the critical mass or the significance that it would get the visibility up at the senior levels of the organization. So they took a different approach, and they just looked at it as an integrated set of opportunity. They invested $1 billion over 10 years. And they have saved $7 billion in the last 5 years. Pretty attractive returns. Not an isolated example. We've done probably over 100 of these around the globe, and we, at a average we get 10% reduction in energy consumption, and sometimes far higher than that. So a lot of opportunity, but it's finding the ways and the means within the organization to aggregate, to get visibility, and approach it in a systematic way. On the flip side, there's the defensive aspects of this, that as new standards get put in place, as new codes, as increasing accountability and focus comes into place, companies can be at risk. This could be a regulatory risk, a license to operate. It could have implications for supply chains. If you supply Walmart and Walmart's decided that they're going to increase their standards 15% and you can't meet it, you've got a challenge. So, and you got reputational risk. You don't want to be the one that's singled out as the emissions pig, or abusive to our water systems, or so on. So a lot of aspects that, as increasing attention gets focused on this, companies need to be aware, not just on carbon, but on the full stream of resources that they consume and impact. And then, as I mentioned, just leadership and having people in the organization that increasingly recognize this, think about this, particularly if you're a global player. And Sonny can talk about that. But the challenges that global players have in balancing all the different regulations and the different levels of commitment that exist around the globe, it's a big challenge. And then there's the opportunity side, and these are just 6 areas that we call out. These are related to clean tech, but we speak about disruption scenarios. Now, we can't say that each of these scenarios are going to happen, but they're not out of the realm of possibility, and many of them have been called for. And if you look at different states, these levels have been in some states mandated. But renewable power generation, 20% of power from renewables by 2020. What does that imply? Well, there are growth businesses around wind, geothermal, solar, grid energy storage technologies. What's likely to decline? Coal and oil burning power plant building or operation. So if you're on the far right, you might want to be thinking about how you shift your business more to the center columns over time, because those are more likely the trends and where the opportunities will be. Energy efficiency, we believe, will be a continued strong trend. It'll go in spurts, it'll vary by region, but the long-term trends just point to the direction of an increasing focus on energy efficiency. The economics are too compelling. And we could see, disruption scenarios, 30% reduction in energy use. And you see things like the mandated replacement of incandescent bulbs, but there will just be more of those types of things. It's getting a lot of attention, and I think the momentum is building on that. Innovation in fossil fuel, clearly what we talked about on the natural gas capacity, but then what's the implication of that? Well, that brings combined heat and power, micro CHP, fuel cells. Now the economics might again become more attractive. Biomass fuel, advanced CCS, different technologies that will innovate in how we produce our power. Overhauling the power infrastructure. I mean, we're all familiar with smart meters. But what are we going to do with all these smart meters? How are we going to take advantage of the information explosion and the data that's available, and today not really fully understood how to mine that in a way that gets the real value out of it? Electric vehicles and all the associated opportunities, and then material and dematerialization. So how do we just get more efficient in the use and consumption of building materials? And then the last point is just when we deal with companies, how do we see them approaching this? It's usually through, we call it an integrated sustainability framework. There's no magic in it, it's pretty logical, but usually companies start off by trying to first figure out what are the new business opportunities. Whether it's operational, the You know, the ability to improve my ROI through better management of my resources, or are there opportunities for me to get into new business? So what are they? What might they be? And then that influences their corporate policy. So GE saw this pretty early, and they said, hey, we got a lot of businesses that could really benefit from environment. And so they came up with Eco-Imagination. They're one of the early charter members of some of the major movements to push for you know, cap and trade and other technology, because they said this is something that we can actually ride. We're an innovator. You know, when there's innovation going on in the world, we can be at the front edge of it and take advantage of it. So it impacts the corporate stance. Now, other people that, you know, feel like they're greatly exposed to this, you know, might take a more defensive, resistant, you know, let's try to slow down the legislation. But particularly for multi-group companies, in this particular framework, it was a company that had 50 businesses. You can imagine it gets a little more complex to say, well, what is the corporate stance when we look across our full portfolio? And then what's the regulatory stance, and how do we decide to influence that? Where do we make our stands? What are we trying to shape going forward? The internal processes, very important. How do we make this happen? Because if you just allow each unit to figure that out, you're going to come up with a pretty muddled response. But how do we integrate it? You know, how did Dow get all the arrows to align to get that $7 billion return on energy efficiency? In this particular company, we trained 100 champions in a year, just educating people, training them, getting them to think about this, to recognize it, and to be advocates of how to leverage the corporate stance and the business opportunities they were pursuing. And then ultimately making the strategic choices, you know, implementing the low carbon strategy for the major business units, and you see the type of impact. So you know, we see, again, a lot of factors. If you monitor this month by month, it's kind of like monitoring the stock market. You know, you could try to be a day trader and guess the trends and figure out when it's going up and when it's going down. But our sense is that overall, while there are going to be ebbs and flows, the trend lines are unmistakable. You know, that the world is heading toward a time when we're going to have to be much smarter about how we manage our resources, and that's going to have great opportunities for businesses that are most attuned to it. So with that, let me pass over to Sunny, who can give you a great example of one of those businesses.
Are we there? Yeah, now we're good. Well, good morning, good afternoon to each of you. Again, my name is Sunny Nastase. I want to thank Georgia Tech and the sponsors for inviting us here today. I'm going to be representing UPS in terms of our sustainability program activities and motivations. And I did want to let you know that we are a company that moves over 15 million packages a day. We're in 200 countries and territories around the world, hundreds of buildings, nearly 400,000 employees. So we sort of cast a big shadow, don't we? And we also, we emit carbon dioxide. That's what we do. On behalf of you all, your businesses and yourselves, you entrust us with your packages, and so we don't fly empty planes around. We fill them up with goods and services going around the world, right? So one of the things that we began to do very early along, back in the early 2000s, was to measure what it was that we were really doing, because we were one of those folks, to your slides, that was looking at who are we, what's our impact, how do we play in this world of sustainability, what will be important. And we were betting that carbon was coming, and we started measuring in 2002. So I'm going to talk a little bit about what we've been doing, and also share with you that some of that is pretty mundane, right? Some of it's light bulb upgrades and light fixture upgrades. So, for example, last year we did 9,000 retrofits of lighting. Big company. So what did that really mean? Well, for us, it saved us in 1 year the equivalent of 5,724 vehicles coming off the road. So when you make decisions in your UPS to say, well, let's change some light fixtures, we're going to spend a little money to do that, it can make a big impact. And we do things that are maybe a little more exotic that I'll talk about today, so I'll give you another fun example. Paint. We are in the top 10 airlines in the world, fly a lot of planes around. We found a safer, environmentally friendly paint, if you will, lower hazardous materials in it. Also means we have to paint not 3 times, but 2 times. Was that a big deal? 300 less pounds on every plane, that's less carbon we need to spend moving that plane. So some of it is pretty mundane, some of it's rather exotic, lots of decision making going around regarding what it is we really need to do, what our priorities are. I've got a handout in my briefcase about this thick on projects, hundreds of them that we're trying to integrate and weave together. So I'm going to share with you not everything we're doing, so we won't have to spend all day and all evening together, but I certainly will share with you some of the things that we're doing that are particularly powerful. And one of the slides, Ken, that you were presenting near the end made me think about UPS in terms of our ability to try to meet that goal, that driving down the carbon spend goal. So for me, I entered UPS in the year 2000, so not so long ago. Last year, we drove 77 million more miles in the US than the year I joined the company. Anybody want to guess how much more or less carbon we spent doing that? 3.2 million less gallons to drive 77 million more miles. That's in the US alone. And so what that says is that decarbonization strategies can be very powerful. They can make a big difference, particularly if you have a big footprint like we do. And so I'll share some of that with you and be happy to take your questions on how that works. I wanted to give you a sense of our overall sustainability strategy. It's not complicated, but it is comprehensive. And so take a look in terms of what it is that we do, and we really think that we are supporting UPS's strategy. Today I'm going to focus on our environmental stewardship, but take a look at the way that we kind of intellectualize our approach to sustainability. This is for our management committee and our leadership. They look at this, they understand how it all weaves together. We make decisions, business decisions, not only based on profitability, although clearly it's important for us to take care of our shareholders and succeed as a company in the next 100 years, but also to act responsibly, operate efficiently, lead by example, protect natural resources. These are all embedded within that list of programs that I told you exists in my briefcase. And this is kind of the decision matrix around which we sort out the activities that we will invest in and that we'll assign people and resources to institute. So I also want you to notice in particular deliver green services. Time permitting, I'll talk a little bit about how we not only are trying to be the best possible corporate citizens that we can, but also to take on the challenge that our customers have and to provide them with products and services that can help us help them try to go toward the goal of a more sustainable environment. We have what I think of as a coordinated sustainability structure. So I'm a part of our solutions group. I just kind of wanted to let you know where I sit. So my primary reason for existing is to engage all of the folks within our organization to get behind what's important to our customers as far as products and services. How do I get greener movement of my customers' freight and packages, be it you who ships on the web 2 packages this Christmas, or whether it's somebody who's, shipping something by container or air freight or ocean freight. How do we get our message of green and green tools out to them? That's what I do. We also have areas, speaking in terms of new product development. Our corporate sustainability elements are important to us in terms of how we behave. And then there's our public relations around this. So that's kind of the way that our structure sits. And for those of you who are building business plans around sustainability, I thought I'd share that with you. All right, so to be clear, UPS is not in the sustainability business, right? We profit from moving packages on planes, trains, and automobiles. We emit over 19 million metric tons of carbon a year. We did that last year. We measured it, 19.3 to be exact. And we know exactly where it is by mode, by scope, and we take that number seriously. I will tell you that we think, what should we do about this 19.5 million metric tons of carbon, and how do we continue to find efficiencies? And so I'll share with you some of those outcomes today. This is not a trend for us. It is actually a business model that is reaping some rewards for us in terms of our reputation in the world. So without reading this slide to you, I'll share with you that we are being recognized, and Marcia, I appreciate you doing some homework and making mention of a couple of those. companies around the world are relying on each other in a more collaborative way than we did maybe 10 years ago to lead each other in taking risks, right? To try to be better corporate citizens, to try to be better stewards of the environment, to try to enable us to continue to be successful and at the benefit of the planet, not at cost to the planet. So there are a lot of ratings and rankings out there that enable us to feel good about what we're doing, but also encourage others, and so we see our role in that. And we're deeply committed to goals. I want to share with you that it's important as corporate entities or schools or governments to begin to share goals and to be a little audacious about those goals. It's one thing to try to improve, it's another to set high targets and work hard to get there, right? So we have an airline emissions goal. Airline is a significant amount of our carbon spend, 35%. And so we have said that we will reduce our ability to, we'll reduce our carbon associated with a ton mileage, in other words, become more efficient in our airline goals. So it's an efficiency goal, same with our automotive goal. And you see here a couple of other items that I wanted to share with you around our commitment. One of the things that I want to mention is item 11. Anybody concerned about packaging? Waste in packaging. When you order a book from Amazon, and it's a little paperback book, and you get it in a box about this big, with a whole bunch of bubble wrap in it or popcorn in it, consumers really care about that. So I'll mention to you later, but we have embraced packaging as a challenge. We are not packing everyone's boxes, but we know an awful lot about boxes and packaging. So our UPS Design and Test Package Lab in Chicago reports into my organization, and we're using and leveraging that expertise to help customers on packaging every day. And we do have a product and a service around that called Eco-Responsible Packaging Program. All right, I'm going to pause for a minute on this slide. There's a lot of language here, and it's very important that I give you a sense of where we are in terms of achievement. So let's just talk about modal shifts, route management, and so on. When you've got 15 million packages moving a day around the world, it's really important that you understand how to move that particular package the most efficient way possible. All modes are not equal, and we'll talk about that, right? Fast, air, highly polluting in terms of carbon. Sea, slow, the best that we can do. So what we have is as our advantage, and our advantage that we share with our customers every day, is making modal shifts so that we can get it at the time that you need it, but at the lowest possible carbon spend that we can manage. So you're going to see that modal shifts and so on have avoided fuel emissions. I'll talk about what that is. Our flexibility in our network allows us to do that. We use rail extensively. Most people don't know that in the U.S. we are the #1 user of rail. We do that. It's extremely efficient transport, and we purchase a lot of it, so we're able to take advantage of moving some of our ground and some of our air volume on rail as long as it makes service delivery. We do that dynamically. So let's look at the column with the check marks. 12 million gallons of fuel avoided through the use of routing technology. That's 116,000 metric tons of CO2 in 1 year. So again, to Ken's slide, where are we going? We're trying to push that number down as far as actual carbon spend. 90,000 gallons less through idle reduction. 113 million minutes in a year. 590,000 gallons or 5.6 million miles through improved stops per mile, and 2.4 million metric tons reduced by modal shifting. So these things all add up. And they add up in a way that sometimes is impactful to the bottom line. So often people will say, well, Sonny, isn't that good for your bottom line? You're spending less on fuel. And it is, but all of this comes at a cost. It's driver training, it's refitting of vehicles, it's looking at route optimization, it's technology changes. These are investments that we're making to bring the carbon down in our network. I also wanted to make mention on the bottom of the slide of our over 2,000 alternative fuel vehicles, and people are often very interested in all of these technologies. We've got liquid natural gas, propane, hybrid electric vehicles, electric, and so on. And often people will say, why don't you drive just an entirely alternative fuel fleet? Well, I will tell you this, that essentially one of these kinds of cars, let's just look at maybe the hybrid electric, that's going to save me about 3 metric tons of carbon a year. 3. Not a lot. I just told you how many millions we emit, right? So it's not, right now the technology isn't there for us, but we call this our rolling laboratory. We invested over $25 million to date. We had the first electric vehicle out there in 1935, delivering UPS volume. So we get it. We know that it's important. And we spend money on these technologies. Why? Because we want them to be viable for us, for our competitors, for you. But they're not all equivalent in terms of our ability to deliver. Some of them do well in city environments where you have to do a lot of stops. Some of them do better in warm environments than cold. So we're out there, we're testing them, and we're running as many miles as we can on them. You'll see over 185 million miles currently on the electric vehicles, as well as the compressed natural gas, liquid natural gas, propane, et cetera, and we'll continue to invest in those technologies. So we talked a little bit earlier about opportunities. We see this as an opportunity to help lead. It is not an opportunity for us to save a ton of carbon, and it's not an opportunity for us to save money yet. But we're around for over 100 years, and we're kind of banking on being around for 100 more. And so we're hoping that we'll be a leader and an innovator in this regard and enable the cost and effectiveness of these vehicles to come down so we can all benefit from them. I mentioned earlier that mode is really critical for UPS, and so we make decisions every day around those packages in terms of the way they move. And I just wanted to share with those of you who may not be familiar that essentially the chain goes like this, right? Fast, in terms of air freight, extremely carbon intensive. About 1/8 of that energy is used if you then move that to the ground. And then rail is 1/4 of the ground transport in terms of intensity, and then sea freight even half of that. So for us to be moving packages around the world, we talk to our customers a lot about mode. And we ask them, does it have to get there in terms of air freight? And if you're, let's say, GlaxoSmithKline or you're Johnson & Johnson and you're moving urgent medical materials that need to be cold, yeah, it has to go through the air. So that's where that airline goal came from. We want to do better in the air for those products that need to move there. But good warehousing practices, good planning practices, good timeline horizons for our customers, we're helping them understand how important that is not only for cost but for carbon. All right, wanted to share with you kind of a little bit of how we approach environmental stewardship and what that might mean to those of you who make business decisions on behalf of your own organizations. So one of our approaches to environmental stewardship is operate our network in an environmentally responsible manner. We do that. We literally think about how are we going to manage our operations to use less waste, to be more carbon responsible, and so on. So our approach is to look at our operations actively, continuously, for savings and efficiencies, and I put here a measurement. We'll show you how. We're UPS, we measure everything. And so we understand exactly where our spend is by carbon, in terms of water, in terms of plastic, right, paper. And so we're looking for those high yield opportunities all the time. And we do that in terms of not only our operations, our buildings and so on, but we do on behalf of the operations we manage for our customers. So the second is invest in technology and business innovation. We can't expect everything to have a short-term payback, and that's not the meter we use to make decisions. I just explained that to you, right, with package cars and delivery vehicles and our investment in those. So one of the things that we would say to other businesses is you need to invest, you need to pick those investments, but don't expect every investment to have a short-term yield. It may not happen. Ken mentioned that maybe you have to look at that whole portfolio of things that you're doing, and some will pay off big and some will pay off bigger in certain areas. So it depends on the cost of fuel or the cost of energy or the uptake of innovation. And we make some predictions and we guess, and sometimes they cost us and sometimes they benefit us. But we're not looking at every single project in terms of its immediate ROI. Prioritization in the environment, prioritization of environment in procurement. So what paper do we use? What ink is my business card produced with? Where do we source paper? Is it from organizations and entities and governments that respect human rights, that protect forestry, Or are we just buying on price? Well, you know what? Some years ago, we might have looked at that differently. So now procurement is an area of focus for us, and we take that very seriously. So the approach there would be considering the environment in purchasing decisions and collaborating with our suppliers, get them on board, help them understand what's important to us and how to help us succeed. And helping customers green their business too. So the approach here is one that I'll talk a bit about. What do we do that we can share with others? And for you who have businesses or entities or ideas that you're working on, how can you collaborate? I think that we're beyond and have maybe matured out of an era of protectionism. Hey, it's my idea. I want to be better than the next guy. To how is it that we can help other people be as good as we are at the things that we do, and how can we learn from them as well? So these are just sort of our ongoing levers of approach that we think about as we practice our business every day. Talk a little bit about customer engagement. So I'll let you take a glance at some of these, but in short, climate change is a pressing issue. And people may believe or not believe, or they may be somewhere on that meter of whether they think climate change is man-made or not, or is happening or not. But it's a business issue that we are finding out there all the time. We recognize that our customers who buy from us want to understand our play in this. They want us to be verbal and vocal and active in terms of addressing it for government regulation and also for environmental reasons. So the market shifts are also getting there. I chose some data here for you to see that the number of S&P 100 firms producing sustainability reports rose by more than a third. We've been doing that since 2003, according to GRI standards. We think that others in the transportation industry should do the same. Report, be transparent, talk about your carbon. Where is it and what are you doing about it? And we see that companies are actually doing that and doing it at a very quick clip. 93% of them report some sustainability information. What does that say? It says that they're beginning to recognize that they can't continue to do business as usual. They really need to look this in the face, and that their customers and shareholders expect it. Companies reporting formal tracking performance has increased 35% from 07 to 08. This report came out last year. So they're talking about where they're going. Where's that goal? How are they doing against that goal? And they're being visible about it. And standards are becoming more important. So we can no longer just say, gee, we're really good, we're trying to reduce our waste, we recycle our water. But we also need to report by standards and hold ourselves to equivalent standards across different business types. Talk a minute about carbon emissions measurement. This is important, right? If you can't measure it, you can't set a goal, you don't know how far you've come from your original point, and you don't know maybe when you're making business decisions that are impacting your ability to have better performance. So here's just some reasons why our customers care and have asked us to help them with their carbon emissions. For most companies, a significant portion of their carbon emission is outside of their walls or their scope 3. I'm going to assume for this audience that we have some familiarity with scope 3 carbon. Essentially what it means is that now I've taken my customers' goods and I've moved them on my assets, right? So I'm taking laptop computers from China and I'm moving them to Los Angeles, and that movement is a part of the life cycle carbon of that laptop. It had to get to you in Los Angeles. I'm moving that for the producer. That's their scope 3. Do you think they care? They should, right? They should. And so guess what we've found a way to do? We can measure that transport carbon, their scope 3, and we can give it to them. And so we can now go to Dell or HP and say, you know what? You're spending X amount of carbon emissions on the transport of those products. Here's where they are by mode. Here's where they are by scope. And we're going to share that information with you. Why? So that they can work on strategies. Be it sourcing strategies, be it where they have inventory, where they get their inventory from, or where they put those laptops or whatever in terms of their audience. So we want them to be able to make good decisions. So why would a laptop producer or somebody who makes PDAs care about that carbon footprint and what I can give them in a report? Well, they care because they sell products to green consumers or millennials, right? It's no longer all about price. The new consumer says, okay, but at what cost? And so they're getting pretty smart. A lot of our customers are recognizing that they've got to put some information about their carbon spend or to promote that their product is greener because their purchasers care. Who else calls me? Those who supply products and services to customers with sustainability requirements. You mentioned Walmart earlier, right? Or if you're going to be producing products for Walmart or food for certain food chains, you've got to come to them and show that you're being an environmentally responsible chain partner with them. So if you want to be compliant, you need to step up and measure carbon. Those who have investors or are seeking investment. So you've got the Carbon Disclosure Project and other entities that will not invest in companies that are not socially responsible. And they're going to hold you to standards, and there are measurements required before they'll be willing to make investment. And so that's another reason why our carbon impact measurements are important to customers. Industries where competitors have environmental sustainability initiatives and product lines. So if I'm going to be competing with Dow, I better step up, right? And also businesses who have environmental risks or public opinion challenges. And I would add for those of us who are emitters of carbon, right? We need to pay attention to that. And so here's just a little look at managing the carbon supply chain. You can see that reducing fossil fuel consumption and recognizing that sustainability programs are all a part of it. And we do look at a very aggressive decarbonization strategy at UPS. We think of it as measure, manage, mitigate. And we talk a lot about that to our customers because they'll say, well, we want to be greener. Well, you need to have an approach there, and this is the approach that we recommend. So in terms of measure, we do that. We have our UPS Global Carbon Inventory. I promise you that we know where our grams of carbon are, where our tons of carbon are, in terms of all of our facilities, in terms of electricity, in terms of fossil fuel. We collect everything. We have an enormous global carbon inventory, and we measure that, and that enables us to do better. So we would say that for our customers, they should do carbon emissions reporting, Scope 1, Scope 2, Scope 3. We help with that Scope 3, as I mentioned. So what about the manage piece? We, as I mentioned to you, have carbon and other waste goal setting in place, and we also have tools that enable our customers to manage along with us, be it that packaging program that I mentioned to you, or a number of other elements, whether that be supply chain modeling, returns and recycling. Increasingly, customers are reaching out to us and saying, I've got bottles, plastic bottles. How do I get them back? How can you help me, UPS? Or I have packaging material. How do I reuse it? How can you help me with that supply chain? So we do have a number of management strategies in place that we do ourselves and for our customers. And then there's mitigation. So carbon neutral transport, you can buy carbon offsets in your business. Many organizations are stepping up and doing that. We offer carbon offsets for our transportation products as a part of our strategic approach. And I won't go through each of these in detail unless there are questions from the audience, but I will let you know that we call Decision Green our portfolio of products and services that can enable customers to be greener. So things like reusable envelope, electronic billing, paperless invoice. These are all things that have a green aspect to them. And some customers are more interested in actual, we want to go ahead and purchase a consulting agreement with you to understand how to model our supply chain so that we can be greener. I mentioned here about carbon footprints, and I'll spend a little bit of time on carbon footprints, but we can certainly speak about it. I just wanted to share our opinion with you that it's important to do it. It's important just to get going and begin the process of an ongoing carbon measurement strategy. It's important to include Scope 1, 2, and 3, the life cycle of products in your own supply chain, so that you really understand how your procurement strategies, your sourcing strategies, and your sales strategies all weave together so that you can be sustainable. It's our view that if you don't measure, you can't really manage to a better footprint or to a better environmental stewardship position. This is that scope 1, 2, and 3. For those of you who are not familiar, I thought I would put this in the slides, and certainly something that we can have a discussion about. Typically, customers that we've spoken to, and businesses and governments, are most worried about reporting their scope 1. Great, report it. It's important. Measure it. But we think the comprehensive momentum of kind of world expectation is that all 3 will be included as a part of being a responsible corporate citizen. I wanted to jump to packaging quickly just to let folks know that this is a serious world problem that we're looking at. So Ken mentioned water, and it's also one that I'd like to come back next month or in January, because we are concerned about water waste. Packaging is, on a global level, a serious problem. If you're curious, go ahead and Google out there looking at the big swirling trash piles out in the Pacific Ocean. There are tons and tons and tons of trash collecting out in our oceans now that will not biodegrade, that are swirling in our oceans, and they are a problem. Every piece of plastic that hasn't been recycled is still around. And so we're looking very aggressively at waste management in terms of plastic recycling and elimination and reduction strategies, and that's part of one of the products that we offer to our customers is a green packaging solution to try to eliminate and to educate our customers on better ways to manage the shipping of goods. So what do we think good packaging looks like? We think it's about box and fill material, and that's what most people think of, right? When I said packaging, you thought of the box, and I mentioned the box. So we can help with that. But it's also that cube optimization. It's how big is the box? Is it so big that something inside has to have a lot of packing material, and then, oh, by the way, you're shipping on an aircraft, a lot of air in the box rather than more boxes and more goods with weight in them? And then, guess what? If it breaks, it's one of the least green things you can do with a product is break it. So if I'm sending that laptop to you that I mentioned earlier, and it's damaged or broken en route, now you need a new one, so there's a whole supply chain of carbon and waste there. I've got to get it to you. I've got to get the other one back, and then there's landfill or repair or whatever. So damage is one of the key elements of a sustainable product. So when we move a product, we don't want it to be damaged. So packaging needs to prevent damage as well. Wanted to share with you as I close a little bit about where we are on this carbon mitigation journey, as well as sort of the waste and water and other issues that I mentioned to you earlier. So one is evaluating our stretch goals. Where should we be next? And what does the world expect of UPS? I think we've done a fantastic job in terms of our carbon reduction strategies. We have, for example, a 33% more efficient ground fleet than the average that's out there. That's astonishing. So you can feel good if we're carrying your goods. We're doing a pretty good job about lowering the emissions of those, and we're proud of that. But where do we go next? What's our next horizon? So we're actively sitting in conference rooms. I came from one today to talk about what is the audacious next goals that we ought to be setting out there, and how will we get there. We're considering new structures and governance approaches. So I showed you our little puzzle piece in the beginning. Is that the most efficient and effective way that we can make change in the world? We're not so sure, and so we're taking a look at how our governance can go out there. And you talked about, Ken, implementing training for our employees and engaging them in ways that we can leverage that terrific resource of nearly 400,000 employees, an example. Of that employee engagement program. So fully engaging our procurement practices, we do a really good job procuring green. We know we can do better. How do we more fully make the thought about the planet we live on a part of every procurement decision in every office and every UPS facility in the world? Focused collaboration. What about in our own industry or outside of our own industry? What partners should we be going to say, how do we collectively put our will and our force together and our intellectual capabilities together to do good as well as to do well? Continued exchange of best practices. That's why I'm here, to share with you maybe some of the things that we're doing, hopefully stimulating your thoughts and conversation between you and listening to our customers. So with that, I believe it's time for questions, and I want to thank you very much. Yeah?
whether or not it's I'm buying something on Amazon. Do you want it super speed? Do you want it slow? Do you want it regular shipping? But the green factor never comes into it.
Yeah, absolutely. So the answer is yes. We have a couple of thoughts in mind. One is we know that we can probably get to putting a carbon indicator on every package that moves. I mean, we know where it's going to go, right? We think of it as a green thread kind of. We're sure of how a package is going to get from Shanghai to Honolulu, right? And so that's one way is labeling, and yes, customers are asking for it. The second is carbon neutral, which today people can choose that as an option in shipping, whether that be a big company or an individual consumer, and that was really, that came from customer demand. But we think that customers will continue to ask that question, and we think we're going to be ready to answer it. But yeah. Okay. Mm-hmm.
We hold just a second. If I could ask this, thank you, Sonny. If I could ask the speakers to sit here, and then Marcia and I will pass the microphone around so that we can. This is webcast, so that we can record the questions. Okay.
This is actually a question for both speakers. With terms of carbon neutral, carbon offsets, and a failure of a U.S. cap and trade market, how confident are customers that there is, in fact, a transparent carbon offset or a trading mechanism here in the United States? And do you see reluctance on the part of customers to pay the premium for carbon offsets because they have the doubt in their mind that it's really working?
I'll say a few things on it, and I think it is an area where there's skepticism because I think people worry that they may be paying for something that is already either embedded in the structure of the company and all they're doing is just allocating their costs against something. But there are ways of, I mean, I think there are groups that monitor that and keep a focus on it. We just haven't seen enough people embracing it, and it's really, I think, going to come from the work of the companies themselves to just continue to innovate and improve, much like Sonny was talking about.
So I'll tell you about my experience with carbon offsets and what customers are doing. So we began offering carbon neutral shipping a couple of 7 months ago. We've shipped about 500,000 packages now carbon neutral. I should say shipments because some of them are freight and some of them are individual packages. The larger proportion of the shippers doing it are green companies that recognize and understand what those carbon markets are about. And so they look at the transparency that we provide to the projects we buy. So they're projects that are monitored, they're tested on things like permanence, additionality, right? So we publish what those projects are. We also don't profit from them, so that's important. We just decided we're going to make it a pass-through. So we show that to our customers. We've put up $1 million match to encourage customers to do that, and we're very careful about the projects we buy. Is there skepticism? Yes. Is it beginning to wane? I think it is. And I think it's really about customers feeling confident that they're not just kind of doing the day trader thing where they just buy carbon offsets. They want to understand that it's a monitored, measured project that's completely clear in terms of what it is and how it's being performed, and also third-party assured.
Ken, this view. We saw the CFO from AGL, and he's talking about 100-year gas that they've got an inventory of 100 years, which honestly doesn't seem that long. And then they're talking about peak oil in now. So a lot of what you focused on was a shift from oil to gas or from coal to gas or oil. Could you speak a little bit about how you guys are looking at the limitation of resources and the potential that we may not have a choice but to move to more expensive renewables?
Well, so there's a couple ways to come at that. We've seen overall a great interest in trying to explore the renewables. I mean, we have unlimited sunlight. We have ample wind. I mean, if you look at the amount of wind we have, it can power the nation Getting to 20%, 25% with the resources, the good sustainable winds are there. So those resources are in abundance. There's no question about it. And I think long term, when you're talking 100 years, we're going to figure out how to harvest those resources. The challenge we have is doing that economically, and that's where the rub comes. So, then you get into discussions about what are the bridging technologies. So, clearly we're innovating, we're pursuing things like wind, we're pursuing things like solar, we're investing in them, we're putting upfront money. It's the right thing to do because you never get down that learning curve unless you make those investments. And from an economy standpoint, and this is where I was mentioning, I think China figured it out, right? They said there's going to be a huge industry around here. We're going to invest in it. But when people talk about job creation, energy is one of the largest areas of opportunity for job creation. So we should be, as a country, participating it and driving for it. But you've got to pace it with the economics of it. And so therefore, that's where you turn to things like gas that in the near term helps mitigate some of the carbon, and it is a low-cost resource. You have some companies like our local utility here that's developing nuclear. Gets a lot of pushback. People are saying, why are you building nuclear when gas is so cheap? And their response is, well, first off, thank goodness we built nuclear 20, 30 years ago, depending on your views. There's a lot of different views on this. But from an economic energy standpoint, we'd have been in trouble during the gas crisis if we hadn't had nuclear. So, ultimately, we got to pursue a diverse balance of approaches. We've got to recognize that the fossil fuels have a limited life to them, that, even gas as compared to coal is good, but it's, if you're talking about the numbers we're going to, we're talking about zero emissions from our utility infrastructure. Gas is only half as good as coal. It still emits. So I think long term, you got to look at the renewables. They've got to be a big part of the mix. Near term, you're going to utilize gas to get us partway there.
I'd like to ask a question from for someone from the web who, to this point about natural gas, given the fracking process, any insights into incremental costs that are today externalized, which could be internalized at some point with gas fracking?
Yeah, so the issue on fracking is that the gas is extracted using basically pumping water and using it to shatter the shale. And there's a lot of concern about the potential environmental implications of that and what it might do to the water supply systems. And so in 2 states in the U.S. right now, New York and New Mexico, there are moratoriums on exploring shale gas while they sort out the issue of fracking and whether in fact it's an environmental problem or not. Now, a lot of the folks in the industry would argue that because this is below 5,000 feet, it's perfectly safe, and that's where the debate is right now. Honestly, I think what we're going to see is that the economics of it are so overwhelming, particularly for some of these regions that have these vast resources. We're probably going to continue to do it. I think New York will get comfortable, and they'll probably lift their moratoriums in the next few months, and we'll continue to see it until some compelling evidence comes out that there's really a problem with it.
Get one over here.
Okay. One of the questions I had was the idea of geoengineering. Have you looked at the geoengineering aspects? People are talking about lime in the ocean, putting sulfuric acid in the stratosphere, deep water injection of CO2, sequestration with serpentinite, et cetera, et cetera, et cetera. So there's lots of opportunities there. And I don't know has there been much of a debate about that as to being a reasonable alternative?
Yeah, there's been a lot of exploration of those ideas, and and putting mirrors up that also reflect sunlight, and so I think all of those. They're all further out for the moment, so I think they're more in the exploratory phase, and we don't have we don't have that much of a science background at McKinsey that we could comment whether they're valid or not. I think the concern people have is always the second order effects. That when you start messing with some of these things that we don't really understand oceans that well. So this might cure one problem. Did we create two others in the process? Same thing with just something as simple as sequestration. We don't quite know. We've had some experience with it in oil recovery, but when you start talking about the volumes and the scale that it would take to make a meaningful difference, and will it stay down there, and it's acidic, so can we keep it from eating its way back? A lot of issues that I think are still unknown, but you all probably have a lot more people here that have expertise on that.
Well, the number I heard for CO2 sequestration, the next century's worth of CO2 is equal to Lake Michigan. So we had to put that somewhere and it can't leak. So
yeah,
that sounds like an interesting challenge to me.
Hi. With respect to geoengineering, it always makes me think of that line, what could possibly go wrong? Ken, with regard to the natural gas supply and cost trends, I've previously seen figures showing that Georgia Power, for instance, uses most of their natural gas as a peaking generating source. In that, in doing so, their cost is probably in the 22 to 24 cents per kilowatt hour range. Now, given the declines in costs that you cited, are you actually seeing utilities like Georgia Power shifting the use of natural gas from a peaking source to a base capacity?
So you have different technologies of gas plants. Some of them, the gas turbines that were designed specifically to be peaking, and then you have the combined cycle turbines that were more developed to be intermediate or base load. So you actually have different technologies, different designs, and therefore capital cost implications. So when you see a price of 22, 24 cents, they may be giving you the fact that I'm taking a capital resource and spreading it over a few hours. So the more you utilize that asset, the more you're spreading the capital cost. So you have both the variable and the capital cost that gets embedded in the number. Overall, I mean, I could show you charts of the sort of the cycles that the industry goes through. There was a period where way back we developed hydro, and then we got into coal, and then there was sort of a nuclear stage, and the last big push was with back in the late 90s, early 2000s. We had the gas rush with the merchants, and it tends to go in kind of herd effects. We figure out what the most efficient technology is, and everybody runs toward it. But when you talk to the industry folks, they always worry that, again, it's a second order effect. If everybody switches to gas, what does that do to the price of gas? And if we have supply shortages like we have had with gas, the volatility is quite high. People like gas until the price goes back up to $16, $18, and then all of a sudden they don't like gas. So that's the challenge of a utility planner, is they're dealing in decades, and most of what we can reasonably predict typically is in a few years. Given the abundance of shale gas, given the appearance that this could actually be a sustained resource, I think the mindset is shifting to say that this is probably something that could be around the next decade or 20 years, which is about the life of a gas plant. And so I think people are getting more comfortable making the bet that, most of the portfolios I see are shifting and adding a lot more gas than what they had. And I think you'll see that in the Southeast generally.
Ken, biomass power has encountered some recent obstacles. What do you see for the future of biomass power? You've mentioned wind, you've mentioned solar. How about biomass?
A couple challenges with biomass. One is transport, so I think it's probably a business opportunity for UPS to fill these trucks up. The biggest challenge that I've heard of, and I don't spend a lot of time on biomass, but the challenge I've heard is the particulates, the emissions. EPA's been a little bit mixed about how they really feel about it. And then you have the competition for land, and the other issue is that if you're going to start doing this at any scale, people worry about the availability of the feedstock and the price of that feedstock. So those have been the challenges that I've typically heard. I think we're going to see some experimentation with co-firing, but large power plants quite honestly, don't like to mess with it. You know, they've got big, complicated problems as it is, just trying to keep their units running efficiently with the coal they put in. They start mixing biomass, they're just nervous. Meanwhile, in Europe, we've seen they've actually been pushing the envelope fairly aggressively and getting up to fairly high levels of burn and seemingly able to address the operational issues. But on balance, I don't hear a lot of momentum for it. And if anything, even the ones that I thought were for a while interested, you know, you've seen a couple projects canceled recently. I think a lot of it's around the particulate concerns, that they're not getting a clear signal from the EPA as to whether this is really something that's going to be supported or not.
Yeah, I have a question for Ken. Going back to natural gas and the low prices now, if you look at the BTU equivalent of natural gas to oil, you know, $4 gas, we're talking $24, $25 oil. And with oil prices, you know, projected up in the $60, $70, $80 and who knows what, it seems like there would be a huge driving force to bring those prices together, you know, on a BTU equivalent basis. Any comments on how that may pan out?
Yeah, well, I mean, I think the convergence will come when you have the fungibility. And right now, you know, oil is primarily going to be a transport fuel, and we don't have natural gas as prominent of a transport fuel. So, and that's where on my curve, you know, I used to see them pretty tightly linked, and now it's kind of broken out of that linkage, and it's, you know, part of it's driven by how it was contracted, but also, you know, ultimately the fundamental is whether or not it can be fungible with these other resources. And so I don't know whether that gap, I mean, long term, if the prices stay at that differential, I think people will innovate. We'll see trucks moving toward, I don't know if you've looked at that, Sonny, but, you know, I mean, certainly, you know, Boone Pickens was pushing that concept quite a bit, and I think a lot of the large trucks are, you know, actually looking at that. Do you have any view on that, or?
No, not at this time. I'm prepared to talk about it.
Okay.
Thanks. Anthony Coker with Seneva. Thanks, Ken and Sonny. That was very interesting. Sonny, on one of your slides and in a bit of your discussion, you talked about the customer carbon offsets and what they could choose. Could you go into a little bit more detail about the types of projects, some examples?
Yeah. In fact, I had a slide, and perhaps I can have it delivered to you if you like. But one of the things that we've been doing is trying to balance our portfolio of carbon purchases in a couple of ways, or offset purchases. One is geographically. So we've got some projects, for example, the Garcia River Forest Preserve that we've invested in California. We've got some in Asia, one in South America. So we're looking to disperse the funding for carbon offsets around the globe and not think sort of U.S. centrically. The second is sort of a diversity of project types. So methane destruction, reforestation, you know, water conservation, things like that. So we're looking at projects that can touch a number of different aspirations that our customers have for where they want those offsets to go.
And you started putting solar on some of your buildings.
You're welcome. You're welcome.
Is that part of your equation? Do you look at carbon offsets from solar power generation?
Not in our own, and that's an interesting question. Some of our competitors will take carbon offset funds from transport and use it to fund internal projects. We don't do that. So that's our own investment. We do have solar power investments in our portfolio, but they're external. So in other words, we don't take the savings that we receive from solar power and fund them from carbon offsets. We do that with our own, you know, investments. Mm-hmm.
I got a question for one for each. Sonny, do you see a lot of companies doing Scope 3? And then my second question to Ken is a smart grid a hype, or is it just being a push by the manufacturer and software makers?
Yeah, okay, so the easiest answer to your question is I have received 90 requests between February of this year and last week to produce carbon emissions reports, a customer's scope 3 from my source. So the answer, I think, it depends on how many you might expect. For me, 90 seems like a lot, and these are typically customers that are in the retail and consumer goods and high-tech and healthcare sectors who are most aggressively going after the scope 3 measurement. By the way, our anticipated number for next year is probably around 300, so we expect that number to rise.
Okay, and so let me respond to your words carefully. I think personally smart grid was overhyped when it came out, but I don't think long term it will be a hype. And so the distinction I'd make is it's kind of like the internet. You know, when the internet came out and we had the dot-com boom and it was going to revolutionize the world, and we had the new economy and the old economy was out, well, that was an overhype, right? People thought it was going to do too much too quickly, and it wasn't quite ready there. But long term, obviously, the internet is going to change everything. Well, we've looked at smart grid, and there's many different facets of smart grid. You know, whether you're talking about the meter on the house itself or whether you're talking about grid automation. So make that distinction. Grid automation has a lot of near-term value, and it could do a lot for the system. In terms of the intelligent meter on the house, it has some interesting operational advantages for the utility. They can detect outages more rapidly and isolate them more quickly. They can do things with remote turn on and disconnect that helps collection issues. They can monitor your usage and answer your billing questions. So there are a lot of operational advantages that when you aggregate them up will get you about 70% of the cost, but don't fully justify the full investment. So you're trying to close that delta in terms of your belief of what it can do with demand smoothing or ultimately perhaps energy efficiency type programs. The challenge there is that we're still trying to get the meters on the homes and get the technology working before you can come out with the more innovative pricing mechanisms and other means of actually trying to influence behaviors at the home. And I think that's 5, 10, 15 years away before they'll really get that figured out. But I think ultimately it will have significant implications, but it's just not going to be next year. And that's why I say it was overhyped. I think people thought somehow everything was going to be different once this meter got on their house. And, you know, I mean, most of you probably have had a new meter put on your house, and I doubt anything has been really different since that meter got put on. But over time, it will change and it will have implications.
Just to follow up on the natural gas fracking, you know, right now it's my understanding that it's exempt from the Clean Water Act and the Safe Drinking Water Act. So the externalities of that $4 to $5, we don't know. I mean, we'd like to think it's safe because it's 5,000, you said, feet below, but it's exempt. And so there's no reporting requirements. Do you foresee a future whereby not just that externality, the water pollution potential, is incorporated in the price, but also what is the carbon intensity of the fracking process? And then when we look at half the carbon output of coal, does that take into account the mining of coal versus the fracking process?
Excellent questions. And I don't know all the answers to the specifics, but I think there's, you know, to the exemption and the externality cost. I think this is getting a fair bit of scrutiny, and as I said, a couple of the states have actually put the moratoriums on to study it. I haven't seen the compelling evidence one way or the other. Believe me, I do a lot of work with the power sector that, you know, they sort of have their coal investments, they're pro-nuclear. They were kind of hoping that, you know, this was going to actually turn out that maybe it wasn't the most economic solution, and no one has really found the smoking gun yet to say it's environmentally hazardous or exactly what those externality costs are. But there are a lot of people looking at them, and let's hope that if there are issues that they get identified, and if they're identified, I'm sure they'll find their way into the cost. I mean, in terms of the extraction cost, I mean, no one's assigning the carbon equivalent to it yet because, of course, there's no price on carbon. So until we get to the point where those things get priced, they'll never get externalized into the cost. And I don't honestly know the relative comparison of the amount of CO2 intensity to extract the shale gas versus coal off the tip of my tongue.
Well, Sonny and Ken, thank you so very much for your insightful and compelling presentations and your responses to the questions. Let's thank our speakers, please.